Welcome back to Boni's Life, the only place where we decode the noise, cut through the hype, and give you the raw, unfiltered truth about the crypto and financial markets. I'm Boni, and if you're looking to navigate the coming week without getting wrecked by the whales, you are exactly where you need to be. Hit that subscribe button, smash the like, and let's get straight into it. We are looking at a massive week ahead. We've got the dust settling from the Federal Reserve's latest moves, a geopolitical landscape that's keeping everyone on their toes, and a crypto market that is coiled tighter than a spring. Bitcoin is currently sitting around $78,661. Ethereum is holding the line at $2,323, and the global crypto market cap is hovering at a massive $2.69 trillion. But what does this mean for you, the trader, the investor, the person trying to build generational wealth? Let's break it down. First, let's look at the macroeconomic picture because you cannot trade crypto in a vacuum. The global financial markets are currently digesting the latest from the US Federal Reserve. We just had the FOMC meeting, and as expected, they held rates steady. But here is the kicker. It was the most divided Fed we've seen since 1992, with an 8-4 split. What does that tell us? It tells us that the consensus is cracking. The higher for longer narrative is facing serious internal pushback. Now, why does this matter for crypto? Because liquidity is the lifeblood of risk assets. When borrowing costs stay high, capital flows into crypto are restricted. We saw this reflected in the bond market, with the 10-year Treasury yield pushing back up near 4.4%. When risk-free rates are that high, institutional money tends to play it safe. However, the cracks in the Fed's armor suggest that a pivot might be closer than the market is currently pricing in. Adding fuel to the fire is the geopolitical situation. We are on day 63 of the paused Middle East conflict, and energy prices are surging. Brent crude hit wartime highs recently. This is a double-edged sword. On one hand, rising energy prices stoke inflation fears, which keeps the Fed hawkish. On the other hand, as Arthur Hayes, the co-founder of BitMEX, recently pointed out, wartime spending forces governments to print money. Hayes is predicting Bitcoin could hit $145,000 by the end of 2026, arguing that the US is quietly expanding its balance sheet by $40 billion a month. His thesis? War means money printing, and money printing means hard assets like Bitcoin go up. It's a cynical view, but historically it's not wrong. Let's shift gears and look at the crypto-specific calendar for the coming week. We have the Consensus 2026 conference kicking off in Miami from May 5th to the 7th. This isn't just another crypto meetup. This is where traditional finance meets Web3. We're talking Morgan Stanley, Nasdaq, DTCC, and Swift rubbing shoulders with crypto builders. The focus this year is heavily on real-world assets, or RWAs, and stablecoins. Expect major announcements regarding tokenized treasuries and institutional adoption. When the big boys start talking about integrating blockchain into their core infrastructure, you know the game is changing. We also have the US non-farm payrolls report dropping on May 8th. The estimate is around 165,000 jobs added. If this number comes in significantly hotter than expected, it gives the Fed more ammunition to keep rates high, which could trigger a short-term sell-off in crypto. If it comes in cold, expect a relief rally as the market prices in rate cuts. Now, let's get into the technical analysis. Let's start with the king, Bitcoin. Over the past week, Bitcoin has been consolidating in the $78,000 range. We saw a massive surge earlier in the year, driven by the spot ETF approvals and the halving, but right now, the market is catching its breath. The key level to watch is the 200-day moving average, which is currently sitting around $82,228. Bitcoin hasn't closed above this level in 7 months. If we can break and hold above $82,200, that is your confirmation of a major trend reversal and the start of the next leg up. On the downside, we have strong support at $75,000. If that breaks, we could see a quick flush down to the $70,000 to $72,000 range. What's interesting is the institutional flow. Despite the choppy price action, the spot Bitcoin ETFs just recorded $1.97 billion in net inflows in April, the highest monthly total of 2026. BlackRock's IBIT alone saw massive inflows. The smart money is accumulating while retail is getting chopped up in the day-to-day volatility. Furthermore, MicroStrategy just reported a massive 17,585 Bitcoin gain, bringing their total holdings to over 815,000 Bitcoin. When Michael Saylor is buying, you pay attention. Moving on to Ethereum. ETH is currently trading around $2,323. The chart here is fascinating. We are seeing a classic volatility compression setup. Ethereum has been trading inside an ascending parallel channel since February. The immediate resistance is at $2,400. If we can clear that, the next major supply zone is between $2,700 and $3,400. The fundamental catalyst for Ethereum right now is the aftermath of the Fusaka upgrade, which significantly increased blob capacity and lowered layer 2 fees. This is driving massive on-chain activity. However, if ETH loses the $2,200 support level, we could see a retest of the $2,000 psychological barrier. Let's talk altcoins, because this is where the real multipliers are made. Bitcoin dominance is currently hovering around 58.46%. If Bitcoin continues to consolidate and dominance starts to drop, we are going to see a massive rotation into altcoins. I'm keeping a very close eye on Solana. Sol is trading around $84.24. It's been stuck in a range, but we have a major catalyst coming up. The CME Group is launching regulated Solana futures on May 4th. This opens the door for direct institutional hedging and speculation. If SOL can break above the $90 resistance, the path to $100 and beyond is clear. If it fails, look for support around $80. Chainlink is another one flashing massive signals. Link is coiling inside an ascending triangle on the daily chart, pressing against resistance at $10. With their recent partnerships routing tokenization flow from major players, the fundamental narrative is strong. A breakout above $10 projects a move toward $12. Casper is also setting up beautifully. It's been compressing inside a long-term falling wedge. With the Toccata hard fork scheduled for June, which introduces smart contracts, we are likely to see pre-fork accumulation starting right now. A breakout from this wedge could target $0.054. So, how do we trade this coming week? What are the strategies to ensure you come out on top? Strategy number 1, the range trade. For Bitcoin, the range is clearly defined between $75,000 support and $82,000 resistance. If you are a swing trader, you are buying the dips near $75,000 with a tight stop loss below $74,000, and you are taking profits as we approach $80,000 to $82,000. Do not get greedy in the middle of the range. Strategy number 2, the breakout play. This applies heavily to the altcoins we discussed. For Chainlink, you set an alert for a daily close above $10. You don't front-run the breakout, you wait for confirmation, and then you ride the momentum. The same goes for Solana above $90. Strategy number 3, the macro hedge. With the NFP report dropping on Friday, volatility is guaranteed. If you are heavily long, consider using options or shorting a small percentage of your portfolio as a hedge going into Friday morning. If the jobs data comes in hot and the market dumps, your hedge protects your downside. If it comes in cold and we rally, your long positions will far outweigh the cost of the hedge. Remember, the market is designed to transfer wealth from the impatient to the patient. The institutions are accumulating Bitcoin. The macroeconomic backdrop, while hawkish in the short term, is fundamentally inflationary in the long term due to government spending and geopolitical instability. Do not let the day-to-day noise shake you out of your positions. Stick to your plan, manage your risk, and always do your own research. That's it for this week's Market Outlook. If you found this valuable, make sure you are subscribed to Boni's Life. Leave a comment below with your top altcoin pick for May, and I'll see you in the next episode. Stay sharp, stay profitable, and keep building that wealth.